Hi, everyone. Thank you so much for joining us today. Before we kick this off, I do want to point out to the audience that we welcome questions. Please post them in the Q&A section at the bottom of your screen, and we will address those questions after today's presentation. So I'd now like to turn this over to Tony Kuhn, partner at Force Family Office. Tony, the floor is yours. Thank you.
Thank you, Callie, and welcome everyone. It is my pleasure to introduce Tim Cesarak, who is the chairman of the board of BioVeritas. Tim is going to talk to us and share the deck on this great company. Tim has great and deep experience at the intersection of energy, waste, and strategic investing. Earlier in your career, he was with Waste Management as in the strategic venture arm, where he was an early investor in BioVeritas, and is currently the operating partner at ARA Partners and a leading climate-focused private equity firm. So with that, I will turn it over to you, Tim, and look forward to hearing more about this great opportunity.
Tony, thank you very much. Pleasure meeting everybody. I'm joined by Mackenzie Kulhinik today. Nice to meet you all. I want to spend a little time giving you an update on BioVeritas. So here you see a picture of the market demonstration unit. We'll give you some more background associated with that, but we're here to talk to you about an investment in BioVeritas today. So what is BioVeritas and who are we and why do we do what we do? Well, we do what we do because we believe that there's an opportunity to unlock the value of low-cost feedstocks that are wastes and residues that could be made into low-carbon fuels and low-cost chemicals that are renewable. We're doing this by leveraging off of existing infrastructure, which hence makes us quite scalable. And at the end of the day, result in a situation where our levelized cost of production is quite competitive with the alternatives and quite near fossil parity. We are backed by a private equity group called ARA Partners. That private equity group will spend a little more time talking about, but it also has a venture arm, it has an infrastructure arm and a growth equity arm. And not only do they bring capital, but they bring capability. And that capability is primarily around the area of taking first-of-kind technology and scaling it with infrastructure-based capital, bringing operating capability and delivery capability to that platform. ARA is leading this $50 million round, is committed to put in 20 of that 50, and so we're looking for an additional 30 million at a pre-money valuation of 85. And the primary use of that capital will primarily be means to provide working capital as well as to the development equity in a project that Mackenzie will tell you a little bit.
Yep. So as Tim mentioned, just to give some more context on who ARA Partners is, they are widely regarded as the leading private equity platform focused specifically on industrial decarbonization. They manage $6.6 billion in assets and have built a team of over 100 professionals dedicated to scaling real asset process intensive businesses like ours. Our strategy is intentionally focused on sectors at the intersection of heavy industry and decarbonization, like chemicals, materials, green fuels, agriculture, and industrial services. So that's exactly where BioVeritas operates. What differentiates ARA and why we value having them as a partner, as Tim mentioned, is execution capability. Through their in-house capital projects team, they've overseen 23 first-of-a-kind plant startups. They're builders, not just financial sponsors, and having that experience materially de-risks our scale-up. They also bring dedicated expertise across government affairs, decarbonization policy, operational scaling, and investor relations. So ultimately, ARA's involvement means that we're not navigating commercialization alone. We have a deeply aligned institutional partner with the capital, experience, and infrastructure expertise required to move from demonstration scale to commercial execution.
We have a very flexible feedstock platform. We'll spend some more time to give you a perspective of where we're focusing, but The point here is to give you a sense of the total addressable market. It's what we believe to be greater than $1.5 trillion in addressable market across all petrochemicals and fuels. And you can see here that our process makes these intermediate chemicals that could be addressed in a number of different markets, whether they be chemical related markets or whether they be fuel related markets. Specifically fuels around renewable gasoline, renewable diesel, and sustainable aviation fuel would be the fuel targets. And then of course there are other products, namely mold inhibitors, also other types of volatile fatty acids, carboxylic acids that ultimately, again, are part of that petrochemical chain that can be used in food ingredients, can be held in health nutrients, performance chemicals. But as mentioned, our initial strategy will be focusing on fuels, namely sustainable aviation fuel, and we'll tell you why here in a little bit. So what do we do? As I mentioned earlier, we take waste-based residues, whether they be cellulosic residue from agriculture or wood from the wood and pulp and paper industry, organic waste that might be food waste that are part of the municipal solid waste stream. And these are all materials that ultimately are available to us in a number of different forms on a global basis. Well, we've developed this technology that I would liken it to, if you're familiar with the gut biome, or if you're familiar with processes that degrade and biomass. So if you've heard of renewable natural gas, for example, that is a process known as fermentation or anaerobic digestion. Well, we use the same process, but we've used a specific mixed culture or a catalyst or a conversion material that ultimately eats all of these materials, these residues, these waste streams, and converts them into chemical building blocks. Those chemical building blocks, as you see, are volatile fatty acids or ketones, ultimately can then be utilized in an existing refining capacity to make fuels and chemicals. We do this because of the robustness of the system, the biological system. It ultimately has a tremendous amount of scalability. And on top of that, we're leveraging off of existing refining capacity to make these fuels. So one platform can utilize multiple feedstocks. We can address multiple markets utilizing existing infrastructure. So we have this optionality around this platform, but the key will be to focus in one particular area, and we'll talk about sustainable aviation fuel here in a minute. So we unlock the next generation of fuels. If you were to ask the customers that we are talking to, what they like about us is we're able to deliver for the same price as existing fuels that are made, like renewable diesel, for example, from used cooking oils and fats, oils, and greases. We can use additional feedstocks, incremental feedstocks to be able to do that. So we have a lot more flexibility around the feedstock. As I mentioned earlier, we have a lower conversion cost, and we do have operating maturity. And we'll talk about our plant in a minute. Our process is patented, and it's also ring-fenced with know-how and also trade secrets. We have multiple patents that have been awarded, multiple that are non-provisional and provisional. And more importantly, we have trade secrets that allow us to be able to do what we do at scale at lower costs. Here's a picture of our demonstration unit. It's a fully integrated market demonstration unit, so feedstock in and product out. As I mentioned to you, we utilize a very robust system. So this demonstration unit has been operating continuously for over a year now. And we've been able to utilize multiple feedstocks that have operated not only in fermentation mode, but also in downstream runtime that have exceeded, in this instance, 55,000 and 35,000 hours, respectively. This is located in Bryan, Texas. So how do we make money? Well, we make money by selling product. We'll talk to you about Project Bravo here in a minute, and also through licensing our technology. You can see here that as we think about the products we sell, namely the chemical building blocks, and we can sell end fuels, but also when we think about licensing our technology, We think that our customers could be downstream refiners or other types of partners. And of course, what advantages us as a licensed technology is it's light on capital from an overall business perspective. And so as we look forward relative to a runway for revenue on this business, you can see here, we expect to see some initial revenue here in 2026, but by 2030 to be in excess of some 50 to 60 million in revenue, simply from the licensing portfolio. And it's important to note that by 2030, Project Bravo, which Mackenzie will talk to you in about a minute, will ultimately give you will be some additional profitability from a project that's being built. So obviously, we're looking to license this technology with established customers. We have a pipeline of opportunities that we're willing to, with an NDA, give you some additional background. On existing infrastructure, we can show where our projects will be deployed. We have multiple sites that we're looking at. And obviously, capital focused on the core platform with proven operating system experience. Again, having the operating runtime at the market demonstration unit that we shared with you earlier gives us a perspective of how to guarantee performance on our technology going forward. So the licensing provides the near-term cash flow for the business to get us the cash flow positive. And of course, as we look at projects, we'll build, own, and operate to provide a longer-term platform for scalability. So as we think about our initial project, our plan is to start out based on crop-based sugars, but that will soon evolve into utilizing cellulosic residue. As you think about the business system of agriculture, we've got corn-based crops. Those crops not only provide sugars from the starch, but there's also proteins that can be sold into the market, fiber that can be converted into fuels, and then, of course, stover, which is basically the residue after harvesting the corn, that too can be also utilized, and that's considered a second-generation feedstock. Obviously, this is the agricultural system within the US, but there are other parts of the world where we could utilize sugarcane, or people could license the technology for wheat straw or rice straw. We've also been looking at opportunities where we would use woody biomass, say in the southeast of the part of the United States or in the Pacific Northwest. As we evolve the technology, there are opportunities to utilize food wastes, particularly in those regions where there are source-separated food waste programs, where food waste is available as part of our process. And then over time, in the long term, there are various energy crops like switchgrass and miscanthus that can be grown to provide energy. And these are the fourth generation of feedstocks that can be utilized. Mackenzie?
Yeah, so as Tim has been mentioning, our Project Bravo, or our first commercial plant, this slide lays out how we would get there and how this $50 million raise directly advances the plan. So the capital we're raising serves two purposes. First, it accelerates the deployment of that licensing platform. And then secondly, it advances Project Bravo through engineering, commercial contracting, and toward our final investment decision. So commercially, we've made meaningful progress. For feedstock, we have executed an agreement with one of the largest Fortune 100 agribusiness companies to supply our primary input. On the technology side, we have partnerships agreements in place with one of the largest players in the sustainable aviation fuel technology market. And on the offtake side, we are actively in discussions with large institutional oil and chemicals companies regarding long-term offtake. Obviously, I'm keeping company names and information at a very high level in this setting, but we're happy to provide specific counterparties under NDA. Operationally, the next key milestones are completing front-end engineering and progressing toward our Plant 1 final investment decision. In parallel, regulatory certification and pathway approvals are advancing towards commissioning. So overall, the key takeaway of this slide is that our Plant 1, or Project Bravo, is not just a concept stage project. It's moving through structured commercial and engineering milestones with credible counterparties. And the $50 million raise is designed to bridge us through these next value inflecting events.
So as mentioned earlier, when you look at our execution plan, we have this platform technology. And of course, we could be in a situation where there are many opportunities that we could be addressing. But it's important that we address those opportunities that are the real pants on fire need. As we think about that and where we have an overlay with customer demand and our platform, it would be in the utilization of our platform to produce sustainable aviation fuel. And ultimately develop multiple fuels along that path to profitability. Why? Well, if you think about sustainable aviation fuel, it's a large market. There's urgent demand. It's a market that's very difficult to decarbonize. When you think about hydrogen-based planes or electric-based planes, while conceptual in some instances, and in some instances beyond conceptual, the distances that they can fly obviously are much less than those that can fly on jet fuel. And so the utilization of sustainable aviation fuel accomplishes a significant portion of the goals that are driven by the commercial airline industry, the business aviation industry, and also through the delivery of parcels and packages as we think about that form of logistical utilization of aviation. And it provides them with a tool to be able to decarbonize that effort. The challenge also is the fact that as you think about the demand of fuel, and we'll show some specifics here in a minute, there are structural supply constraints, primarily from the feedstocks. Now, there are a number of ways to be able to produce sustainable aviation fuel that would be a drop into existing refineries. But the reality is that many of those inputs are very expensive. Green hydrogen, green CO2, these are all elements or feedstocks that are very expensive to produce e-fuels. When we think about our process, we're very competitive with existing infrastructure and the utilization of fats, oils, and greases. However, there are structural constraints around that. And so when we also think about the demand pull, our ability to deliver sustainable aviation fuel is aligned with long-term policies, whether that be in a mandated market that you see in Europe or in Singapore and other places of APAC, or whether that be a voluntary market that you see mainly in North America or other parts of the world. So as you see here, we think that the sustainable aviation fuel market is about a $300 billion total addressable market. And not only is there an increased demand around travel via aviation, and you think about the ability to deliver a low-cost renewable fuel to the marketplace, the existing lowest cost means is through the utilization of fats, oils, and greases. And so these feedstocks are limited. And as we think about the scale that's necessary that you see here and the limitation of those feedstocks, it's just going to drive up the cost of those feedstocks to the place where it becomes binary. If they're not available, they're not available. And so other means of feedstocks have to be utilized. And so where we come in is that we provide a scalable commercial technology that utilizes incremental feedstocks, like the ones I mentioned earlier, that can not substitute, but add to the existing ability to produce fuels, namely sustainable aviation fuel, on the same platform that's being utilized with seed oils, HVO, hydrogenated vegetable oil, utilizing fats, oils, and greases, and used cooking oils. And on top of that, by virtue of utilizing these cellulosics, we also have traceable supply chains associated with the carbon intensity and the land use associated with those particular feedstocks as well that are highly auditable in the process. So we see the SAF market as a global market for the utilization of our platform that is the most near-term immediate opportunity for us. As you see here, we talked a little bit about the ability to leverage off of existing infrastructure downstream. This gives you a perspective of those renewable diesel facilities and biofuels facilities that we could easily be bolted onto. There's some 153 global plants that are across the world that ultimately would utilize the technology that we have upstream of itself. So if you imagine that process flow that I showed earlier, we make those intermediate chemicals that could be utilized at these facilities to make incremental demand. And we see these particular plants as licensing opportunities for us as we go further. Strong team, very deep. Dr. Steve Toon, Dr. Ellen Del Paggio, Mackenzie, others obviously have experience at taking these technologies and bringing them from pilot to demo to first of kind commercial. Not only our team, but also the ARA team supporting us has significant background relative to execution of first of kind capability. This is a list of that team, and looking forward to introducing you to them to the extent that you're interested in taking the next step. So again, in summary, our platform unlocks feedstocks that are constrained to make low carbon fuels at lower cost of production. We can use existing infrastructure, again, which drives toward, again, levelized cost of production being the lowest, a proven team, and a strong partner with ARA leading this next round.
Okay, great. I'm going to have you stop sharing your screen and we will get into the questions. You had said that ARA is putting 20 million into this round. Have they invested in previous rounds as well?
Yes, they have. They've invested in both the A1 and the A2 and will continue to invest in the A3.
Great, thank you. And where are you in the ASTM certification pathway for your SAF product, and what milestones remain before airlines can purchase at scale?
It's an excellent question. And Mackenzie can keep me in check here, but we are literally at the place where by the end of April, we should have finished fuel that will be in the hands of the ASTM to complete their steps. We anticipate that the ASTM certification will occur in the back half of 2026, possibly in the early part of 2027. However, it is our view that we will ultimately be fast-tracked. So we're hopeful that in 2026, we'll have reached that ASTM certification. Our discussions from off-takers relative to sustainable aviation fuel is such that their take would be contingent on that ASTM certification. And as I mentioned to you before, tactically, our approach will be to produce winter diesel, renewable gasoline blend stocks prior to that ASTM certification being received as well. So we're going to build optionality in our offtakes that provide multiple fuels to hedge against the time associated with ASTM certification. While our hope is that we'll receive it soon, some of those elements will honestly be outside of our control. But because of our platform, we can produce fuels that meet that ASTM certification today and would be offtake today.
And what are the key technical bottlenecks to commercial scale deployment? Yield, contamination, downstream processing, et cetera.
Sure. I would say that from a technical constraint, we need to make certain that there are no contaminants that come through various feedstocks. While we have run on over 35 different feedstocks, if I'm not mistaken, we've been able to identify some contaminants and ultimately are able to manage that. I think it's also fair to say that when we think about the processing of materials upstream of us, again, under NDA, we're happy to share with you a number of technology providers that we're working with that are experienced in providing the level of feedstock that we need that creates as much homogeneity as possible. And then I would say downstream of us, we've done significant amount of testing associated with our fuels and the performance to the point where, as Mackenzie mentioned earlier, there's a technology provider that's very satisfied with the specification and reliability of our feedstock going downstream of us. So while contamination is something that's important to us, I would say that we're always mindful of contamination. However, I think that we have identified very solid mitigants associated with that in our basis of design going forward. As it relates to other technical constraints, I would say we have a good sense of scale and what it's going to take ultimately from a fermentation perspective to scale up. And our other processes that we've identified to convert our intermediate chemicals into fuels have been scaled at commercial scale. So we feel very good about that as we scale up this next facility.
Great, thank you. What offtake discussions or MOUs exist with airlines, refiners, or fuel distributors? What will it take to convert those into contracts?
Yep, good question. I would say, namely, it's going to be them, I would say, playing around with the fuel that we've got as we think about diesel products and gasoline blend stocks. I also think it will be, let's say, us reaching some terms that for us allow us to be able to finance the first project. So we need to get to a place with each one of these off-takers relative to term and price, and then obviously credit worthiness. These are three elements which will be critical anchors of those off-takes as we're in negotiations with them.
And then what is your estimated delivered feedstock cost at commercial scale, and how does it compare to fats, oils, or ethanol?
Sure. I would say from a delivered cost perspective, we are at parity with that of what would come from used cooking oils today. There is a process known as hydrogenated esterified fatty acids. It sounds like this question is coming from somebody who's familiar with HEFA as the terminology. That HEFA-based SAF, we're very competitive with that price point. Under an NDA, we're happy to share with you more specificity around that. But suffice it to say that with where used cooking oils are today, our process is very competitive with that process.
Yeah. And how sensitive are margins to feedstock price volatility?
No surprise, if you were to do a tornado chart of the sensitivity of our process, it would lead with capital. Capital intensity is obviously a significant element of sensitivity to our returns. Hence, this is why we look for opportunities to leverage off of existing infrastructure. And then followed by feedstock costs, no doubt. Obviously, if you're dealing with a zero-cost feedstock, it's going to be a lot better than if we're using something that's been processed many times. So that's probably the second most element around sensitivity. Just to share a little further, the third most element is going to be the regulatory environmental benefits and the voluntary carbon market benefits that ultimately accrue to us over time.
And what does the first commercial facility look like in terms of CapEx, capacity, expected EBITDA margins?
Sure. Happy to share more detail of EBITDA margins under an NDA, but let's just find for you. I think it's fair to say somewhere between 400 and 500 million. Is that about right, Mackenzie?
Yeah.
That's on an unlevered basis, just to be clear.
Mm-hmm. And how do you think about exit pathways and what timeline is realistic?
Sure. From an exit perspective, I would say that as we think about the licensing of the technology, the licensing business unit, I would say has a number of fits with other technology providers in the marketplace. And then as we begin to build a platform of plants that ultimately produce finished fuels, I would see a strategic buyer of those plants. So the most likely exit here is going to be through acquisition as opposed to, let's just say, a public offering.
Great. Well, thank you thank you to the audience for all the great questions. Before we close out, I just want to point out to everyone, Everyone out there has my email address. I'm happy to facilitate an introduction to the team here. In turn, they will have all of your information and will be reached out. And Tim and Mackenzie, I do want to turn it back over to you for any final words before we close.
I have no final words. Mackenzie?
Yep, no, it's just great getting the opportunity to speak to all of you today and look forward to connecting with you afterwards.
Thank you all very much.